Binance margin level and margin call are one of the key components of the Binance margin that crypto traders should take note of when trading on the Binance platform. Margin trading allows you to add leverage to your positions to increase your potential earnings and profits. Binance uses the margin level to evaluate the risk level of your margin account. For a quick scenario, the margin level or risk level or liquidation point is the point at which your assets could get liquidated. When the margin level is less than or equal to 1.1 ratio, the liquidation engine will be triggered and all your assets will be liquidated to pay back the interest and loan. The system will send you a notification through mail, SMS, and website to inform you. When the margin level returns to 1.5 or at a safer level, the system will stop the liquidation process. For a quick overview about Binance Margin Trader, you need to know that as a new user that wants to start using the Binance Margin Trader, you will need to create an account on the Binance platform. Once you've successfully created an account on the Binance platform using your email address or phone number, you can now go ahead to complete your KYC and verifications. You will also need to complete your two-factor authentication on your account. You can then fund your account using any of the funding options available on the Binance platform. Once you've done that, you can click on the icon and go over to the trade section where you can see the margin trading and you can start trading. The margin trading is a way of using funds provided by a third party to conduct asset transactions. This third party in this case is Binance. Compared with regular trading accounts, margin trading account allows traders to obtain more funds and support them in using positions. The Binance margin trading amplifies trading results so that traders are able to realize larger profits on successful trades. The Binance margin trading is divided into the isolated trading or the cross-account trading. And this trading can be done in just 4 simple steps. You can transfer your funds. You can go over to your sports wallet to transfer your funds to your margin account page and transfer your assets. You can also decide to borrow on the margin account and then confirm the asset you want to borrow. You can click on the trading to kickstart your trading journey, and you can also click on the repay function once you're done trading. The margin trading supports a wide range of cryptocurrencies such as BTC, ETH, BNB, USDT, and more. Effectively control your transactions and trade in a responsible manner. You can also enjoy the best transaction rates for quality service on the Binance margin trading. The Binance margin trading provides excellent transaction depth and also an opportunity to get discount trading fees when you utilize BNB on the Binance platform. Some key features to note here is the fact that the Binance margin trading has the insurance funds put in place. These insurance funds help protect your accounts when your equity or assets to liabilities is lower than zero, or the assets of the pledged currency borrowing orders are insolvent. Binance offers the cooling off period, which is one of the most important or one key features that crypto margin traders should take note of. So aside keeping a close eye on your margin level, Binance has put in place a cooling off period which prevents users from excessive trading or addictive trading. This in the long run will prevent you from making losses or making bad decisions when trading. So in order to help users avoid excessive trading, margin trading has introduced a cooling off period function. All you need to do is to turn on the cooling off period, and you're good to go. The Binance margin trading also has a reliable security. The risk fund protects your digital assets from all risk. Margin trading is also used in stock, commodity, and cryptocurrency markets. There are lots of FAQs here that users can find to understand some more about crypto margin trading in particular. For a quick overview, users should know that Binance now supports the Funday giveaway. This is a TGIF giveaway that is mainly done on a weekly basis on Fridays. So Binance crypto margin traders can now enjoy up to 20% trading fee cashback on the Binance margin trading platform. All you need to do is to go over to the Funday Friday Binance margin dashboard to claim your bonus, and you can also view your records that are made available to you. You can trade margin, trade or borrow Binance margin during the week, and you can go over to the Binance margin Funday Friday column to claim your bonus, which is available 9 UTC on a weekly basis. Binance encourages users to repeat the process. This Funday Friday period or reward program started on January 14, 2022, and in order for you to be eligible for this, you should have the Binance margin account and complete KYC verifications. So you are only eligible if your daily average margin trading volume is 1000 BUSD or more. Users from the restricted countries are currently not supported. So Binance has created this program to share rewards and to appreciate crypto margin traders in return. So you can receive rewards based both on your margin trading volume and total borrow amount. So here's how it works. Every Friday at 008 UTC, Binance takes 20% of the income from Binance margin transaction fees. 5% are distributed based on average borrow amount, and the other 15% are distributed based on average trading volumes. And these rewards are in BUSD, and the calculation is as follows. Your rewards depends on your margin daily average trading volume divided by the daily average trading volume of all margin trade users. Binance calculates income from Binance margin trading fees for the period between 1600 of the previous Thursday to 1600 of the next Thursday. So users can gain the feed from this giveaway period and enjoy up to this. The average daily borrow amount should be no less than 100 BUSD. If your average daily margin borrow amount is more than 100,000 BUSD, Binance will calculate it as 100,000 BUSD. For distribution, bonus will be sent to your spot account directly after you claim it. It will expire if you do not claim it within 5 business days. So sub-accounts, trading volume, and borrow amounts will be counted under the parent account. Looking at next at some of the important cooling features and talking about the margin cooling off period. The margin cooling off period, as part of the ongoing efforts to encourage responsible trading, Binance has launched the cooling off period for margin traders. The cooling off period allows users to temporarily suspend all margin trading activities for a specified period. Users can set a cooling off period of 1 day, 3 days, or 1 week as per their needs. During the cooling off period, margin accounts cannot be used to borrow any cryptocurrencies. When to use the cooling off period? You can use the feature to limit and control your trading activities, especially in situations when you feel pressured by losses. It enables traders to abstain from behavior and activities that can lead to irresponsible trading. Now, some of the frequently asked questions is the fact that, can I trade on spot market during the cooling off period? Yes, the cooling off period only applies to margin trading including isolated or cross-margin trading, and the borrowing of cryptocurrencies too. However, activities such as inter-wallet transfers, repaying of loans will not be affected. Question 2 says, can I choose the duration of the cooling off period function? Said yes, you can choose to use whichever duration of cooling off period that is suitable to you. Say, can I terminate the cooling off period early? Binance does not allow you to terminate the cooling off period early. Once the cooling off period is enabled, it cannot be lifted and will only be terminated after the preset cutoff time. All trading features and confirmation buttons will be disabled. Please wait until the cooling off period ends before you should go ahead with ending it. To get access to these, you will need to log into your Binance account. As seen on the screen here, once you've logged into your Binance account, you can click on the cooling off period. Alternatively, you may click on the trade option. Once you click on the trade option, you should be able to see the cooling off period. Then you can now click on the confirm to select your interval for 1 day, 3 days, or 1 week. So please note that the borrowing function cannot be turned on during the cooling off function period. You can click confirm to disable your margin borrowing anytime. We're now going to go over to the Binance margin trading and looking at some of the differences between isolated margin and cross margin. So Binance supports cross margin trading and isolated margin trading. The major differences between these two types of trading is the fact that they both have different leverages. For isolated margin trading, each trading pair has an independent isolated margin account. Only specific cryptocurrencies can be transferred in, held and borrowed in a specific isolated margin account. So for instance, in the BTC USDT isolated margin account, only BTC and USDT are accessible. You can open several isolated margin accounts for trading different pairs. The position is independent for each trading pair if trading margin is required, even if you have enough assets in other isolated margin account or in the cross margin account. The key takeaway from this article here is to note that for the cross margin trading allows you to spread across different assets when trading. When trading on the margin trading, you can open several positions when using the cross trading mode. For isolated mode, it is very advisable as a beginner to start using the isolated mode, as it allows you to focus on only a particular crypto asset and open only one position. So experienced traders can utilize the cross margin trading well enough, while isolated trading is more friendly for beginners. Also, for cross margin trading, the leverage positions given for cross margin trading is 3x. For isolated margin trading, the individual leverages varies according to the digital assets you want to trade on. So users can get up to 10x leverage positions when utilizing the isolated margin feature or mode. Also, you want to take note of the fact that the Binance margin trading or the Binance isolated margin trading, these both tradings are made possible on the Binance margin platform. Next, we are going to look at the risk which is associated in each isolated margin account. So once liquidation happens, it will not affect any other isolated positions. Next on the list, we are going to look at the Binance margin trading. As a new user, you would need to open or you would need to start a quiz or watch a tutorial video for you to get access to the Binance margin tutorial. So once you successfully completed the quiz, you can now start trading. Right on our screen, you can see we have BTC against USDT, which you can decide to trade. You can decide to use the cross or you can decide to use the isolated trading options. So whichever options you want to use, they are bid mode. These modes are made available on the Binance platform. Some of the advantages and disadvantages of margin trading. The most obvious advantage of margin trading is the fact that it can result in larger profits due to the greater relative value of the trading positions. These trading positions, other than that, margin trading can be useful for diversification as traders can open several positions with relatively small amounts of investment capital. Finally, having a margin account can make it easier for traders to open positions quickly without having to shift large sums of money to their account. For all its upsides, margin trading does have the obvious disadvantage of increasing losses in the same way as it increases gains. Unlike regular spot trading, margin trading introduces the possibility of losses that exceed a trader's initial investment and as such is considered a high-risk trading method. Depending on the amount of leverage involved or used by a crypto margin trader, even a small drop in the market price may cause substantial losses for traders. For this reason, it is important that investors who decide to utilize margin trading employ proper risk management strategies and make use of risk mitigation tools such as stop limit orders. For a quick wrap-up, our main takeaways is that the margin trading offers access to exotic trading pairs, which involves two cryptocurrencies paired together. Instead of buying or selling the cryptocurrencies to themselves, the trader is speculating on the relative performance of the two. So unique to margin trading is the ability for users to invest multiple assets as collateral to trade with leverage. For example, investors can use their BTC and ETH or BUSD and USDT as collateral. Margin trading opens up arbitrage opportunities in the futures market, especially when funding rates are volatile. For a quick wrap-up, you need to understand that the Binance has the Funday Trade Friday rewards, and also you need to understand the concept of margin trading. And now for the quick tips, you need to know that as a crypto trader or a crypto margin trader, you need to keep a close eye on your margin trading level. And also to avoid excessive trading, margin traders can make good use of the cooling off period function. You can also make plans for using isolated or cross-margin accounts, which is made available on the Binance platform. For the cross-margin or isolated accounts, each has its individual leverages. The isolated account is very user-friendly and it currently has the highest leverage positions up to 10x, while for cross-margin trading or cross-margin accounts, users can enjoy up to 3x margin trade. For a final wrap-up, we're now going to look at some of the tutorial videos here on how to use or what is the margin trading in particular.
Get started with Binance Margin Trading. With Binance Margin Trading, you can borrow funds to perform leveraged trading, which amplifies both profit and risk. Follow these 4 easy steps to complete margin trading within 1 minute. Step 1. Open a margin account. Log into your Binance account Then go to the BTC USDT trading interface. Select the cross margin or isolated margin tab. Click on Open Now to open the corresponding margin account. Step 2. Transfer collateral. Click on Transfer and enter 10,000 USDT. Click on Confirm. Then transfer 10,000 USDT as collateral from your spot wallet to your margin wallet. Step 3. Auto borrow trade. Place an order and borrow funds automatically. Let's suppose that the BTC price is about 10,000 USDT. Select Borrow. Insert the price 10,000. Insert the quantity 3 and click on Margin by BTC. Once the order is fulfilled, user would have bought 3 BTC with the 10,000 USDT collateral and borrow 20,000 USDT automatically. Step 4. Auto repay trade. Place an order. Once it is fulfilled, repay the borrowed amount automatically. Let's suppose that BTC is about 11,000 USDT now. Select Repay. Insert price 11,000. Select 100% for the quantity and click on Sell BTC. Once the order is fulfilled, the borrowed 20,000 USDT will be refunded automatically, and the user will earn 3,000 USDT profit. If the exchange fees and interest are ignored, in this case, the user would gain 30% profit and earn up to 3 times profits in Binance margin trading. If, after closing the position, the profit generated is not enough to repay the borrowed amount, the system will not deduct it automatically from the user's wallet. The user will have to refund manually the owed amount. How simple is it? Please open the cross or isolated margin account and try it.
So I will be dropping the link in the description box for you to get access to the Binance margin trading and start trading.